Look at the market temperament right now. It's election news which has dominated both Indian market and global market in last 6 months. Elections in India, followed by elections in Europe, and then finally election in US. Biggest democracies in the world have voted, have gone for the election cycle this year, which surely has kept everybody busy and everyone guessing. Second was deluge of IPOs, from a Waree to a Swiggy, from a Bajaj Housing Finance to a Hyundai. A lot of IPO news in a sense had an impact both in terms of volatility and new market cap creation. And the third was earnings, where earnings have not been great. Let's understand these three factors which have impacted the market in last 6 months. Where do we go from here? Surely nothing new will come on elections now. Markets pretty much know that which way the new administration in US would move and how things have really moved forward in a seamless manner despite coalition government being formed in India. Then IPOs. I don't expect deluge of IPOs will continue because the IPO market in a sense is no longer as vibrant as what all of us thought. And the third is earnings, which is most important. I get a sense that somewhere markets are factoring in a bit of a slowdown already that is getting captured in the way how stock prices have corrected, and the markets themselves are down a good 8-9% from the recent high. The problem is that in this market flows from FIs are continuous and the momentum to buy into the market clearly seems to be missing. So either momentum has to reverse or momentum inflows have to reverse, or markets in a sense would get a new trigger point. I don't expect a new trigger point really to come by December end. However, I do expect that the excess oversold conditions in Indian market by foreign institutional investors, that should change. In next 2 or 3 weeks, I expect markets to start making a base. A lot of collateral damage has happened in individual stocks, and that's where I think you would see the change. For me, the turning point really would be when IT starts underperforming, when cyclicals and PSUs they start outperforming, and when banks they start making higher highs. These are 3 or 4 patterns which I would watch out for to really call the market bottom. I don't expect a serious downside, nor do I expect a serious upside. This is a time when the market would be testing your patience, the market would be testing your temperament. The trick to make money in a bull market is that don't look at today, tomorrow, look at next 3 years. Rather than timing the market, stay in the market, because we've learned over the course of history by spending time in the market, the returns are the best.